A retail business owner sat down with me at the end of May last year because something felt off. She'd been watching her QuickBooks numbers all year and things just didn't seem to add up. Revenue felt higher than she remembered. Some expense categories looked impossibly low. She'd been making decisions, a new hire, a lease extension, a marketing spend increase, all based on what she was seeing. When I did a full mid year review, I found errors in every category. Wrong opening balances carried in from the prior year, 3 months of bank statements that hadn't been reconciled, revenue from a deposit account that was being recorded twice, and a payroll expense that was $22,000 lower than it should have been because of a setup error that nobody had caught. She was 6 months into her year, operating on completely wrong data. I'm Bev from bookkeepingcoach.net. June is the halfway point. Right now is the single best time to find out if your books are wrong, because there's still enough time in the year left to fix them. Reverse bad decisions and finish strong. Finding errors in December is expensive. Finding them in June is fixable. Let me show you what a mid-year review actually uncovers. She ran a specialty retail store, about $980,000 in annual revenue, 3 locations, 7 full-time and 4 part-time employees. She used QuickBooks and had a bookkeeper come in twice a month. Here's what we found when I did the mid-year review. The wrong opening balances. Her prior year didn't close cleanly. Her CPA had made several adjusting entries in April, but they weren't reflected in the QuickBooks file. So the January 1st balances she'd been building on were off from day one. Her retained earnings were understated by $18,400, and one liability account was overstated by $9,200. 3 months of unreconciled bank activity. Her checking account hadn't been reconciled since February. 4 months of transactions were in QuickBooks based on the bank feed, but they were unverified. When we reconciled, we found $6,700 in transactions that were in the bank but missing from QuickBooks, and $4,100 in duplicate entries from a free feed that had briefly imported twice during a QuickBooks update. Revenue was recorded twice from a deposit clearing account. She had a separate account where customer deposits went before being transferred to her checking. Her bookkeeper was recording the income when the deposit hit and then again when it was transferred. 5 months of double counted revenue was $31,000. A payroll setup error, a pay type for a manager's cell phone allowance was miscoded as a non-taxable benefit in QuickBooks, but it was actually processed as taxable through her payroll provider. The tax entries weren't matching. The result? Payroll expense on her books was $22,000 lower than what had actually been paid out, making profit look better than it was. Inventory was not adjusted for shrinkage. Her inventory balance hadn't been physically counted since January. No shrinkage adjustments. No write-offs for damaged goods. Her inventory asset on the balance sheet was overstated by an estimated $14,000. 6 months of wrong data. She'd hired a new manager in March based on partly the revenue trends that were inflated by $31,000 in double counted deposits. She'd signed a lease extension in April after reviewing profit figures that were $22,000 higher than reality. She'd passed on a piece of equipment financing in May because her cash position looked better than it actually was. None of these decisions were necessarily wrong, but none of them were made with accurate information. At the halfway point of her year, she was operating blind. Most business owners review their books by pulling a P&L and looking at the bottom line. That's not a review. Here's what a real mid-year review covers. 1, the prior year closing verification. Confirm that your CPA's year-end adjusting entries are reflected in your current year opening balances. If your December 31st adjusted balance sheet doesn't match your January 1st QuickBooks opening statement balances, you're building on a cracked foundation. 2, bank and credit card reconciliation. All accounts through May 31st, not just the checking account. Every account that touches the business needs to be reconciled and verified. 3, revenue accuracy check. Look at your income accounts and trace a sample of entries back to the invoices, contracts, or deposits. Watch specifically for double counted revenue, deposits recording as income before services were delivered, or revenue in the wrong period. 4, payroll reconciliation. Your payroll expense in QuickBooks should match your payroll provider's reports exactly. If they don't match, something is wrong. And payroll errors are among the most expensive to fix, especially when tax filings are involved. 5, balance sheet sanity check. Every line item on your balance sheet should make sense. Bank balances match statements. Inventory reflects physical reality. Liability accounts match what you actually owe. Equity balances follow logically from the prior year. 6, year-to-date comparison to budget or prior year. If you're 15% ahead of revenue and 30% over on expenses, is that real or a data error? Significant variances deserve explanation, not just a shrug. So as you hit the halfway point of your year, what are your options? Option 1, keep going as you are and find out in December or at tax time next April that the numbers were wrong. By then, you'll have made a full year of decisions on bad data, and the corrections will touch every report, every comparison, and possibly your tax return. Option 2, pull the 6 checkpoints I just described and go through them yourself this month. If everything checks out, you'll have confidence for the rest of the year. If you find issues, you'll have 6 months to address them, which is enormously better than 6 weeks. Option 3, learn how to do proper mid-year financial review so that finding and fixing errors becomes a regular process, not a crisis. The halfway point is the most powerful moment of the year for catching and correcting problems. Everything is still fixable. The year is still salvageable, and decisions you make in the second half can be based on numbers you've actually verified. If what you just heard sounds familiar, you're in the right place. At bookkeepingcoach.net and Can-Am Bookkeeping, we have courses designed specifically for small business owners who want to understand their numbers, protect their business, and stop finding out about expensive problems too late. Step-by-step training from 30 years of real-world experience. No judgment, no jargon, just practical knowledge that saves you real money. Head on over to bookkeepingcoach.net or Can-Am Bookkeeping and find the course that fits where you are right now. The link is in the description below. Subscribe for more QuickBooks and financial management tips, and I will see you in the next video.